Hey, good morning. Let's go over today's trade plan. So, in the overnight session, the market has been balancing within Friday's range, but on the smaller time frames, the sell side has been more dominant. Looking at the other markets, the Nasdaq's a bit weaker on the smaller time frames, and if it breaks below 42.93, then that would confirm short-term weakness, and it could lead to some more selling in ES as well. So, if you're watching NQ, keep an eye on 42.93 to 42.94, and on the upside in NQ, a breakout above the 42.15 to 16 area would signal short-term strength. Now, looking at the S&P, we have support at 83 quarter to 85 quarter, and holding above that, the buy side still has control, and there is possibility of moving back up into the 94 quarter, 96 quarter area, filling the gap, and testing 99.5 to 01.5. The 88.75 to 90.75 zone is more of a reference area that we're going to use as the micro bull bear to confirm short-term strength. So if you get a breakout above 88.75 to 90.75, it's just a bit of a signal that on the smaller time frames, the buyers are regaining control. Whereas right now, heading into the open, the sell side has been a bit more dominant. So if you break above 88.75 to 90.75, that would be the beginning of a change in that short-term trend, which could lead to a test of the 94 quarter, 96 quarter, 99.5 to 01.5, and in the event of some strong upside momentum, 06 to 07.5. So those are the ideas on the upside. On the downside, a break below 83 quarter to 85 quarter would signal the sell side gaining control, at least on the smaller time frames, which would bring the 74.75 to 77 support into play, and potentially 66 quarter to 69 quarter. Given the overall bullish bias in this market, responsive buyers can defend on first test of each support zone, with the 66 quarter to 69 quarter zone being higher odds because it is the bottom of the developing balance area. And given that we're running on fairly light volume, if that continues into the open, then you would also be exhausting the range by the time you got to 66 quarter, 69 quarter. So that's really going to be an important inflection point for buyers on the downside in the event of a breakdown. And on the upside, if you're holding above initial support and then you're breaking micro bull bear, you would have to see some upside momentum. But the really decent area of resistance is 06 to 07.5 and beyond. So, given the light volume, it can be a bit of a slower or choppier type price action, but volume does not have an impact on the underlying direction of the market. It's really more affects the short-term character of price action, so it can be just a bit more choppy, a bit more two-sided, and generally a little bit slower. So, that just kind of notes the underlying environment, the type of environment we're in. Now, when you're running on lighter volume, not only can it be a bit slower and choppier price action, but you can also get a fairly limited range on the day. So if the volume continues to be light after the open, then you could just exhaust the range on the downside or even on the upside, and the market may just chop around here short term before we really get really another directional move with any kind of conviction. So given the type of environment we're trading in, today, with it being lighter volume and the direction is not really that strong, the trend is not really that strong, it makes sense to be fairly selective here off the open and overall just be selective on the trades that you take. When the volume is running light, the opportunity potential is fairly light as well. So you don't want to necessarily take too much risk unless the reward side is really there, and that can mean waiting for the market to hit an ideal zone, an ideal location before entering any kind of trade. So again, heading into the open, the sell side has been dominant on the smaller time frames. how the market responds to 83 quarter, 85 quarter, and the micro bull bear will help set the directional bias on the day time frame in the event of a breakdown. 74, 75 to 77 and 66 quarter, 69 quarter are going to be the important areas of support. Those are our main thoughts. Let's see how the market reacts to initial support, and we'll take it from there.